This video is for entertainment and educational purposes only. There is always a risk when investing in the stock market. These videos are never a suggestion to buy or sell any specific stock. It is always advised to do your own research and to keep learning more and more about any strategies used in these videos. Welcome back to the channel all. I hope all had a safe 4th of July weekend. And going forward this week, I hope all have a prosperous week. 4th of July was observed yesterday on the 5th. So this will be a short week in the market. It'll only be 4 days. So with that being said, let's jump into week 28 of our Roth. And looking at the account balance is currently sitting at $16,234.11. And that balance has now been updated. Today is July 6th. Again, it's a short week in the market. So the total is $16,234.11. So this week I wanted to quickly kind of go over, every week I show that, okay, this week I made $300 or whatever, right? So I want to talk a little bit about realized and unrealized gain briefly here. So I'm going to look back at this example here, which I think will help here. So let's look at the blink charging. So if we look at last week, and next we're going to look at blink charging. This is also one we've done in the past. Looking at this, it's currently at 42.27. The bid's at 42.41. Coming down the chain here, I'm going to sell a $38 put option. So last weekend blink was at about $42 and we bought a $38 put. So looking back at history here, that blink $38 put, we ended up getting $29.35. Now looking at the details here, he actually bought it at $38. That's because blink, it closed on Friday at $37.38. And I think this will help explain puts and calls too a little bit. So blink last Monday morning was at 42.41. So 100 quantity of blink was worth $4,241. Someone paid $30, minus the commission, to sell a put on blink at $38. Okay, so they were bearish on blink. So they had a feeling blink was going to go down. So they said for $30, they would sell their blink 100 shares at $38. So we ended up buying it. So it's currently at $37.38. So if we take this to $62, so they made basically $30 or $32 off of this because they paid $30 to sell it at $38. It's now worth $37.38. They're out of it. It dropped below that, right? We're down $62. So when I say, okay, that week when I added that up and said we made $30 or $29.35, now we own 100 shares that we paid $38 for. The stock is at $37.38. So now we will sell a call option. We'll probably sell the $38 call option, 100 shares, and it's going to give us that $3,800. When we sell this call, it's probably going to be worth about $40 or something. It may even be 30. If we leave it at 30 and 30, so that's like $60 that we made. 30 for selling the put and 30 for selling the call. Now, if the stock hits $38, we'll end up selling it. This will be realized. Right now, currently, this $30 is not really realized. I mean, we physically did get the $30, but we're down on the stock also. So technically it's kind of like you didn't really make the 30, right? But once this stock hits 38 again, our loss right here will end up becoming zero, right? It washes everything out, and then whatever we got for the put and the call will then be realized at $60. Now, if this doesn't get up to 38, let's say it gets to 37 or even drops below that, we'll keep selling this call over and over again, and every time we sell it, we'll make 30 or $20 on it, and we'll keep doing that until the price hits 38 and it executes again. So the biggest thing is we don't sell this at a loss. It's all about how much we sell this for. As long as we keep waiting until it goes at 38 or above, all of this will end up being realized. And that's basically all we're doing. The stock was at $42. We went ahead and said, hey, we'll give you $38 for it because we know eventually it's going to come back up to 38. And all we're going to do, if this would have closed at say 38.01, then we could have turned around this week and sold like a 36. We just follow the stock down, and once we own it, we follow it back up. So that's basically all that we're doing. Hopefully that helped. Hopefully it wasn't too confusing. If you have questions, just leave a comment in the video below. So looking at this week, the Corsair Gaming, Nano Dimensions, Orbital Energy, and Tattoo Chef, those all don't expire until July 16th. So looking at what we have that currently still, we have the Blink and Gopro that we need to sell call options on because we now own it. So the first thing we want to do, we'll just go down the line. Looking at Blink, cost basis is $38 a share. We're going to come over to this drop down box and we're going to click right here on options chain. And looking at Blink, again, it closed at $37.50. It's already came up about 20 cents or 18 cents, somewhere around there. It's starting to rise already in the pre-market. We bought this at $38, so we're going to find a $38 call option. That's what we want to sell it for, to make sure we don't sell it at a loss. Once you find the one you want, you just come across here and you click right here on trade. Once you select that options chain, this will open up, and make sure, especially if you're new, that you always read this so you understand what you're doing. We're selling Blink security. We own 100 shares now. It expires here in a few days. We're going to sell the $38 strike price. We bought this at $38. We're going to sell it at $38. We made money when we bought the put, and we're going to make money here when we sell the call. But we want to make sure that we're breaking even with our cost basis. It'll be a call option because we do own it. We're going to sell to open. Remember, think of yourself as a merchant in like a flea market or something. You're at the booth, you're selling coupons for people to buy stock. So we're sellers. We're selling a coupon. There's going to be one quantity. It's one quantity for every 100 shares you own. If this was 200, we could make this a 2 quantity. We used to be able to sell these at market, which made it easy, but for liability purposes, you now have to do a limit. A limit order, you got to check the bid price. The bid price is at 0.88. This stock is already starting to rise. It's, there's an hour and a half till the market opens. So this may continue to rise and may go lower. So we're going to do a limit at 0.75. I'm setting this limit lower than the bid because as this stock is moving up, this bid price is going to go down basically. So 0.75, if this stays the same and it's at 0.88 when it opens, and we have a limit lower than the bid price, it'll still give us the highest price that it is at that current time. So you're not really, shorting yourself here. You'll still get the limit. The fact that it's a limit, you'll still get the price that it is when the market opens. But if this, if you don't do a limit price lower than the bid, then it may not execute, which is fine. You just will have to check it. If you're going to work or something like that, you will have to check it when the market opens, which we do every week. So I'm going to set a limit of 0.75. I'm going to review and submit this. Next, we have Gopro. This is one we've had for a while, or a few weeks now. This is the case where you're just waiting for it to get back to your cost basis and making a little bit of money on the calls while you're waiting for that to happen. Our cost basis on this is $11.86 a share. So we're going to come over to the drop down arrow and go to options chain. And our cost basis is $11.86. So we come down the chain here. We have to go above our cost basis. So $12 is the first one above our cost basis. And when your cost basis, you're making, right now it's saying, you will get about $6 if this stays. So that's $6. Let's say that this is our 4th week holding this, and it was about the same. That means we'll keep getting $6 every week. So that's $24. Our cost basis was $11.86. So if this hits our $12 strike price, we're going to gain another $14 in capital gain for a total of $38. And so as we're following and waiting for this to go back up, we're kind of collecting this call money. And then since we have this at $11.86 and we're selling it for $12, we'll gain a little extra there at the same time. So we find the one we want and we click right here on trade. And again, if you're new to this, this one will cost you about $1,000. So you have to have about $1,200 in your account. So if you wanted to try, if you're new and you're starting off and you're trying this, you can always start with something small until you get used to it. $6 bid, though, that's $5. Well, with the commission, it'll be like $5.30. So $5, $10, $15. So that's like $20 a month that you're making. And then if it sells, that's another $14. So you'll end up with about $34, and you just keep doing it over and over. And eventually you'll get it. And just make sure that you're reading this. You're selling GoPro. Expiration date is the 9th, which is this Friday. $12 is your strike price. You're selling a call option. You're going to sell to open. You're going to do a quantity of 1. It'll be a limit order. Now, if you're doing this and it's 8:30 Central, so that would be 9:30 Eastern, just check on wherever you are. Check and see what time the market opens. And if you're doing this after the market opens, you can just hit market here and it'll execute. A limit price, because prices fluctuate so much in the pre-hours before the market opens, this could drastically change. That's kind of why they're starting having us to do limit orders in the first place. So it makes it a lot easier. If the market's open, just come here, change this to market order, and it'll just execute no matter what price it is. You won't have to worry about it. But I kind of do this for people who have to leave for work and can't be here all day. You set your limit price. Again, always set it below the bid. If it goes up, you'll always get that price. But if you set it at 0.06 and it changes, it's not going to execute. So make sure, if you're going to set a limit price at the bid price, that you're able to check it on your break or when you get a chance when the market's open, because you might have to adjust that. So we'll review and submit this one. So that will be all of our calls. If we're looking here, if you're using Charles Schwab, cash and cash investments is saying there's a total of $7,082.94. But that includes the puts that you have. We have a $1,750 put and $750 put for Nano. So you will have to subtract those puts. Another way you can do this, you can come up here to hover over accounts and go to balances. And you want to come right here to where it says funds available, and to trade, we have 4,582. We had cash on hold 2,500. So we had the 750 for Nano Dimensions and the 1750 for Tattooed Chef. If you add that up, it comes out to 2,500. So if you don't want to do the math yourself, you could just always come down here to balances. It will subtract it from the 7,000, and we have a total of 4,582.94 to trade with. So again, always check your balances. Make sure you're not going, you're not selling below, because I'm pretty sure it might stop you from doing it, but it might let you also, and then you're going to end up in trouble. So always check your balances. If you have put options out there, make sure you come and check your available balance before you sell any new puts. And since we did end up owning Blink, we might as well sell a put option also on Blink. That way, if it ends up going down even more, we can average out our cost basis. If it goes up, the put expires and the call gets executed, and we're good. So we're going to click right here. We're going to come to Blink, come to the down arrow, go to options chain. Same thing we do if we were selling a call. So Blink is currently around 37.50. We are 3 days out. This is the one we want. it stops at $35.50. I do want to see lower prices than that, so we can come over here. It's currently just showing the first 8. There's a total of 46 strike prices. It's showing the first 8. We want to see what else is available, so we're going to click right here on all to expand this chain. Once it's expanded, it shows the rest of the chain, and with Blink being at $37.50, I think this week I'm going to sell, if you look here, the $34 and the $34.50 are both $20. So if you're going to sell a $34.50, you may as well sell the $34. That gives you an extra 50 cent lower you can get, and you end up getting the same price, so it doesn't matter. So I'm going to sell the $34 put option. You find the one you want, you come across, and we're going to select trade. And again, make yourself read this. You're selling Blink, expiration the 9th, $34 strike price. This time it's going to be a put option. We're going to sell to open. We're going to do a quantity of 1. The bid is currently at 0.20. We're going to set it 5 cents below that at 0.15. We'll review and submit this order. So we have roughly $45.82. We just sold a $34 put. So that's going to be $3,400. We have $1,182 left. You know, we have this Gopro and our cost basis is $1,186. It's currently at $1,118 with $1,100 left. Why don't we go ahead and sell a put on Gopro? So we'll come to the down arrow, go to options chain, and looking at the options chain, we can easily sell the $11 put and get $15. But the whole point here is we would want to lower our cost basis. If we're at $1,186, we want to at least get it down to $11.50. So I'm going to sell the $10.50. It's only $3, but it will help in lowering the cost basis, and it just makes more sense than the risk $11. And you know, actually I just whipped up Excel real quick, and basically we bought it at $11.86. There's 100, so our cost basis of $11.86. So basically this formula is going to add these two, and it's going to add these two, and it's going to divide it by that. So let's say we did a $11 put. That's going to bring our cost basis to $11.43. If we did a $10.50 put, it will bring our cost basis down to $11.18. So you got to kind of think of it this way, like, okay, $11.18, if it ever got this low, the $10.50, it would be easier to bring this down to $11 by cost averaging down again, and then we could sell an $11 put. But if you put it at $11, you're at $11.43. You're still lowering your cost basis, which is currently at 11.86, which means we have to sell the $12 put. Usually these strike prices are in 50 cent increments. So at 11.43, it would move us down to the next strike price of 11.50, right? So we could sell the 11.50 because we'll be under it with a $7 upside capital gain potential. So I think I might actually sell the 11.50 because I am bullish on Gopro. So looking at that, you know, sometimes I rationally just do this real quick, but if I actually run the numbers, it will lower our cost basis below the next strike price of 11.50. And also looking at this, it moved up a couple of cents, so it's already moving in the right direction. So I think I will actually change my mind and go with the $11 put strike price. And you know, if you think about it, the calls on that, selling it back up, it's not that big of a difference. So it's just, that's kind of, you know, if you look at this whole thing kind of like a business, that's kind of where you make these decisions. Could be a good one, could be a bad one. Basically, you got to think of it like, how long are you willing to hold this stock, you know, for it to get back? Would it get back there? Yes. It's just a matter of how long that's going to take. So again, as always, read this. Gopro, expiration the 9th. We decided on the $11 strike price. It will be a put option. Sell the open, quantity of 1. The bid is currently at 0.15. It's went up a little bit. So I'm just going to go ahead and leave the limit at 0.15, and we'll check and make sure that this gets executed. So we'll review and submit this one. So with about 1100, that's again something you got to think about when you're trying to switch between those two to make sure that you have the cash. And I had to pause for a second there, and we did have 1100. So we should be good there. So we'll come back after the market opens and make sure that these got executed. Okay, the market is now open. I see our blink calls and puts. Gopro put is here. I don't see our Gopro call. So we're going to go up to orders and go to open orders. So looking at the GoPro has dropped to 10.97. So the bid has also dropped, which we had set a limit of 0.05. That's why it hasn't executed. So I'm just going to change this to market now that the order is open. We'll review and submit this order. Okay, so the Gopro call is now in here. So let's go up to accounts and go to history. And looking at history, Gopro call, we received $2.35. Gopro put, we received $14.35. The blink put, we received $14.35, and the blink call, we received $74.35. All of these are expiring this Friday on the 9th. So looking at this week with blink and GoPro puts and calls, the total of $74.35, $2.35, $14.35, and $14.35. That's a total of 30 and 71, 105 and about 40 cents. So $105 this week. So $100 is not bad. You know, I saw GoPro already drop below $11, so I was kind of like, man, I should have went with the $10.50, but the plan is just to stick with it and wait till it gets back to that strike price. So it's just a matter of time. So guys, if you found value in this video, I would appreciate a thumbs up. Don't forget to hit that notification bell if you haven't subscribed already, and consider subscribing. I do put a video out once every week. I am planning on making a new series here soon, so make sure you hit that notification bell, and I'll see you in the next video.